Morning all, how are we all doing? Morning Ian, morning Kennelly, morning Razvan. I am almost finishing your free bootcamp. Cool. Carry on. Morning Bradley, Monkey, Christian, Andres, Danny, Yotko, Weird Dad. Morning Weirdo. Morning Martin, Gregors, Evans, Mark, Seymour, Butts. Morning Sarah. How are you doing? So I made a boo-boo yesterday. I had my timings set wrong. Yesterday was the first day, I think, last month, I actually let the SIH EA run until the close without intervening. And I had the last candle set to 11, and the last candle is not 11. Last candle is 22.10. So it didn't close the positions out last night. So I'm stuck in the hedge from yesterday. So I've just got out the longs this morning. And obviously it's placed the aggressive exit. So I've banked $1,200, $1,300 on that this morning. I'm just going to go for a loss recovery target on it. I'm hoping we're going to break to the downside. We've got a small gap to the DAX downside. So I'm hoping they're just going to run for the gap this morning. And I can get out of that hedge from yesterday on the NASDAQ. But I didn't even look at it. I came in last night just to shut my PC down. And obviously the market was shut and I was still in the hedge. So I've adjusted all the timings on this now. So they're correct. 22.10 is the last candle. It was set wrong. Obviously clocks have changed and I didn't change that. So lesson learned there. Morning, Philip. Morning, Virginia. Right, so news today. It's FOMC day. So it's really hit and miss today as to what happens. Sometimes we get a manic FOMC day where the market is repositioning itself ahead of FOMC. Sometimes we get absolute flatline, and all we get is literally quarter of an ADR up, quarter of an ADR down. Just basically them waiting for FOMC. We're not expecting a change. The Fed have made no indications of a change in interest rates. So the press conference is what's going to move the market this evening, 6:30. That's when they're going to lay out their forward guidance for interest rates. But it's going to be basically, we're not changing the interest rates until Q4 2024. No one is. So I can't see anything different coming tonight. So I'm not expecting a massive influx into or out of the US dollar. We'll get a lot of volatility, obviously, we always do, but I don't think we'll move anywhere. So this afternoon we've got PMIs, manufacturing PMIs, and we've got the non-farm employment change at 12:15. So we've got pre-market and post-market news to deal with this afternoon. And there's a few holidays in Europe today. So the DAX, obviously being the German index, I don't think it's going to get affected, but you never know. We might just have a really slow, whippy, hedgy open, but we'll see. Morning, it's time. So that's today's news. Overnight, we've had some earnings. So overnight earnings, wrong calendar. Overnight earnings, we've had AMD. Mixed result from AMD. Slightly softer Q4 projections, so we might get some downside on the NAS. We've got a couple of pre-markets today, but the vast majority of today's is aftermarket. So this is all going to impact tomorrow's price action. Got Lemonade. How's Lemonade? Etsy, MicroStrategy is quite big. PayPal is obviously very big. Roku's huge. Airbnb. So that's what's going to be affecting tomorrow's market. We've got Heinz this morning and Estee Lauder. So I'm not expecting a huge amount of movement out of the indices either today. So it's one of those days. Main news overnight, obviously, was to do with yesterday's non-intervention. Basically, the Japanese changed their mind totally on what they decided they wanted to do with their monetary policy. After telling us the day before that they were going to do something, they decided actually to reverse that decision. So yesterday we had I have no idea what that is as an ADR. 300% maybe. I don't know. 270 ADR. So 80, 160, 240. So that's kind of about 325, 350 ADR. Absolutely huge day. And it looks like it's trying to move again today. So obviously, as we would expect overnight, we've had Japan coming out and saying a few things about it. Mainly, we are eager to carry out diplomatic relations. No, that's not one. Sorry, one. We won't comment on Forex levels. And Canada saying we may not confirm intervention even after intervening, i.e., we are going to intervene. Yeah, we won't tell you we did it, but we're going to do it. So this is a confirmation of this is not acceptable. We will soon be dropping the crap out of everything if you're longing the yen. So, yeah, that's basically a confirmation that that's not happening. So that's coming down. When? We don't know. We might get another rally on it. We've got FOMC today. FOMC might ease the pressure, but either way, get ready. I have no idea why they did what they did yesterday. That was ridiculous. It was the most stupid thing I've ever seen in my life. Come out one day and say one thing, come out the other day and say totally the opposite after the market's pulled into the yen. Anyway. Market's about to open. DAX today, we have a slight gap down to start. We had an up day yesterday. So upside potential is basically last week's high initially, and yesterday's low will be your, previous day's low, I think probably is the most likely downside target because we've got that gap fill to do. So if we're going to remain bearish, obviously we would expect last week's high to hold up and then come down and get that gap fill done today, which is 125, 150 ADR. So it's going to be quite tricky to get down there, I think. But especially on FOMC day, because the market's going to be waiting for FOMC. So we'll see where we go. 4 seconds to the open. There we go. We're open. So I'd like a run to the downside, ideally, so that I can get out of my NASDAQ. But anyway, we'll see what happens. FTSE's trying to push higher. Okay, we're out the lows. Short the DAX. Not a great target to the downside. We might get some reaction off the gap fill. So watch price action out of the gap. Let's see, we've got to get there first. So upside is going to be above the placing some manual orders on my other terminal. That's triggered. That's good. We're off. Let's see what that NASDAQ's doing at the open. If I can get flat on this today, I might just take a break even on it rather than trying to go for the profit. But we'll see. See where we get to. Morning day trader FX. Okay, so running into potential support. Yesterday's close high and gap. So watch this level. Morning, Mark. I keep wanting to call you Hogue. Every time I see your name, I keep thinking of Hogue from Top Step. Hogue is their resident trader, for those that don't know. He's an old pit trader. It's an old pit trader. Spit on the floor pit trader out of Chicago. So not bad volume this morning. Kind of like to see the FTSE drop. That will help us along our way, but at the moment the FTSE's struggling to break pre-market range. It looks like it's going to now, though. There we go. The DAX is taken with it. So there's your gap fill done. Decisions. Let's just see what the NASDAQ's doing. NASDAQ's breaking short as well. That's good. Okay, gap's complete. So downside today, obviously we're looking for the previous Friday gap fill at the moment. So we gapped up Monday. We didn't manage to get down and complete that gap. So there's unfinished business down there. That's last month's low, last week's low, and obviously gap. So it's a long way to go. So that's ADR today. So we're going to need to do 150 ADR, which means we're going to need something like FOMC or the non-farm employment figures to drop the UK, the US market. So we're going to need a rally off the US basically to get down there today. Unlikely we'll get there, but we'll probably start to head that way, hopefully. So we'll see if we can maintain this rally. The FTSE still hasn't managed to break out yet. FTSE's still stuck inside the opening range. So there is resistance at the lows at the minute, but see where we go. Morning, Peter. We'll have a look at the FX markets in a minute. I just want to see what happens on this initial cash balance open. Hoping we're going to get a flush out of this because the FTSE's looking really weak as well. So not a lot of conviction though today. We're holding the gap. NASDAQ's buying up that low. I need to get out of this. $700. So pre-market low, I can get out the pre-market low. That'll do me if we can get down there. So I'm going to need some more weight. FTSE's broken short marginally. It's not a lot, actually, a limit of liquidity today. Trying. I'll come back to that in a minute. There's not a lot of volume, so fairly decent break, obviously, to start with, but just worried about that gap break. So we'll see where we go. I'll keep an eye on that on the other platform. Right. So back to square one. Zeros. All zeros. So ended last month on 22%, I think. 21.7. So 21.7% finished last month, which was pretty good. Sitting in 8% drawdown at the moment. So we'll have a look at the FX pairs. We'll have a look at what's going on this morning. We had the news overnight from New Zealand where we got the unemployment rate as expected. Market's not had a great reaction to it. It's just a little bit bullish New Zealand dollar, little bit bullish Aussie dollar, but no real movement. So we've just got an as expected result overnight there. FTSE's just broken down really hard. Hopefully that will take the DAX with it. So that's the only overnight news we've had that will affect FX. Wrong terminal. So there's no ADRs to look at today. The weeklies, obviously, it's not usual to hit weekly ranges on a Monday or stroke Tuesday, on a Tuesday rather. It takes some big moves, and obviously we've got a lot lit up this week, but it's all yen based, as you can see. So everything on here you can see is either yen based or Swiss based. So the yens you can obviously ignore because that we know why they've hit. we're fully expecting those to come down, so you don't have to ignore them. But yeah, they're all really good short opportunities. There's no ADRs here, but we've got 2 Swiss francs that have hit as well. So Euro Swiss has already hit weekly range. So obviously that's Monday. And that is your weekly range hit already. So we've done 100% of our weekly range in 2 days. Market is starting to roll over. I've got a short on that at the moment from the H1M5 mean reversion yesterday. So that entry was yesterday in there. So that was a reversal alert yesterday. We got invalidated with a new high. So that's coming down fairly nicely. We've also got the pound Swiss. So euro and pound tend to move together. So obviously it's pretty much the same move on both of these guys. So nice big push up into propulsion. So all upside propulsion gaps now filled, all downside propulsion gaps in play. So we've run straight into that lovely accumulation, that area of balance where we broke from, and they've started to sell that area. So we've got an H1 reverse alert just gone in on that one. Again, it's an H1 M5 mean reversion entry for me. So got in short on that yesterday, pretty much the same as the Euro Swiss, except the pound is holding up a little bit better this morning. So those 2 are your weeklies. They're not massively extended, obviously. We've only just hit, sorry, that's New Zealand dollar yen. Get that? We've only just hit the weekly range. So first day of the month, obviously there's no monthlies. If we haven't got any dailies, we can't have any monthlies. So that's all basically the ADRs today. RSIs, there's only a couple to look at as well. So Euro Swiss, again, extended on the 4-hour. So that was extended on the hourly yesterday. It's extended on the 4-hour, as you can see as well. So quite a nice push on this. Not really a profit take at all on that entire move. So I would look for, as you can see, I'm looking for just under a 50% retracement into that propulsion on the 4-hour, which is this low here. So I'm just looking for a pullback into there. And if it wants to carry on with a new leg, that's fine. If it doesn't and it comes down, because this is bearish, obviously, at the moment, it continues this bear move. Obviously, we're looking for market structure to remain the same. So we could expect retest of that low, or if not, breaking that low. So that's Euro Swiss. That's extended on the 4-hour. We've got pound Swiss. It's all the same stuff, basically. Everything that moved yesterday was against the Swiss franc. So again, same move. Yeah, I haven't put a TP on this one yet. That's all right. I'll go for that propulsion gap, ADR. That's just over 0.25%. If you want to get a little bit more aggressive, that high before that propulsion gap is probably an area we'll bounce at. We hit that level, came into it, hit it again. We then found balance there for 2 days, broke it, retested it, and off we went. So that area there, which is previous day's low, and that high is a better target. That's 150 ADR. There's no news euro wise today. It's all about the US dollar today. We've got Jordan speaking a bit later on. Oh no, we've got Jordan speaking a bit later on. So we might get some movement on the Swissy. It's very rare Jordan ever says anything that upsets anything. They are so tight-lipped. They don't let us have even any information about anything, the Swiss. So it's unlikely. This is why this is always orange. You never get a red Swiss National Bank talking head, because they never tell us anything. So unlikely, but we have got that coming up. But apart from that, there's no euro news. There's no pound news. It's all US today. So we've got no catalysts really in place at the moment to move this today. So we'll see where we go with that one. And obviously US dollar Swiss, we have got catalysts today. First short taken on that one again yesterday. That's an H1 RSI extension. 5-minute reverse alert went in there yesterday. So that's your reversal alert off of that candle there. So yeah, first one on that one. Need to put a TP on that as well. It's FOMC day, so I'm going to go for 0.5%, that high there. So that propulsion gap is the logical place to aim for, which is this a nice area of balance that we broke from. So this is the accumulation break. DAX is pushing back up inside the range. So that potentially is the move if it does drop. But obviously it's FOMC, so we could get a 200% ADR move in either direction today. So if it is going to go my way and we are going to drop the US at FOMC, I'll target that low. That gives us a nice 0.5% profit on that, one in, one out. Just put it up a little bit. So that's yesterday's low, previous day's low. That's that high there. So that's the target on that one. That's nicely extended on the 4 hour, well over the 80. But difficult to know what we're going to do now with the US. So obviously there's no forward guidance we've got really, apart from everybody is in the same boat at the moment with fundamentals. So when you look at the fundamentals for pretty much every country, DAX is inside the opening range. So just push back up inside the opening range at the moment, which means my NASDAQ, I might have to re-hedge this. Really didn't want to be in this today. I wanted to be out of this. I should have just shut it, shouldn't I? To get myself into a mess. I'm just going to re-hedge this above that propulsion gap. It's going to cost me. This isn't a good start to the month, is it? Okay, DAX has just refilled that initial open. So the gap fill is the play today, unfortunately. I was really tempted to get out of one down there. Should have done. Did he move? Might hold. So yeah, fundamentals. Wrong one. So yeah, if you look at the fundamentals on everything at the moment, interest rate changes are now flat. Inflation at the moment is still coming down across the board, but slowing dramatically. You know, we've got zeros, which means we're not coming down anymore, and we've got less than 0.5% moves on a lot of other currencies. So that inflation is flattening. We tend to get that sort of movement when inflation drops. So everybody's basically looking like we're at terminal rate. So all we're going to get from central bank meetings now is we are going to hold rates and watch inflation. So this is your key driver as to what happens next. It's going to be very difficult for them to increase these because unemployment, as you can see, is flat. And the only way this goes down is if this goes down. For that to go down, that's got to go down. So if that goes up, puts pressure on that, which makes that go up, and everything goes wrong. So it's very difficult for the central banks at the moment. We're kind of, if you look at inflation and interest rates as an oscillator, we're kind of teetering now above the norms, and the only way is down. But we could well just do that for a year, which is what we're expecting. So we'll see. But so every news event that we get now related to interest rates and forward guidance from press conferences shouldn't really be that impactful unless they come out and say something which changes their guidance. But the guidance at the moment in history is always when you get to terminal rate, you stay there for 6 months to 12 months and wait to watch and make sure it's enough to make inflation go down. So we'll have to wait and see what happens. But so the main figures we're interested in now are CPIs and PMIs. Sorry, PPIs. So we'll see. DAX has just rejected that propulsion gap. So hopefully this is lower high market structure going in. And we are going to run that gap. See, so we're inside bar at the moment. We've got 2.5 minutes left on this candle. So we're forming an inside bar. Indecision. Pause. So the break of that outside bar candle basically should give us the next directional move. Which means that my NASDAQ, good, didn't get hedged. That's good. Did I close this? Oh, I don't know what to do with this. I don't want to be in this. I don't want to be in a US index during Frankfurt. I hate trading the Globex session. It's just painful. I could just walk away with an $800 loss rather than hedging it in at like 1,500 or $2,000 or whatever it will be. But then again, if the DAX is going to drop, this will come down. I'm going to leave it for 5 minutes. Right, so I'll run through my positions. So that's all the RSIs, all the ADRs. I'm going to run through my positions back to front so that we start off with oil, my friend, oil. So I just saw a big order come in on the FTSE. FTSE's trying to break into new lows, which will take the DAX, hopefully, with it. Virginia, if you get a support level for the month, week, and day, what does this indicate? Very strong support. If you get a support level for the month, week, and day, what does this indicate? Very strong support. No, well, you're always, if you think about it, you're always usually going to get one level that is a monthly, daily, and weekly support. So this one yesterday is this week's low, yesterday's low, and the last day of last month, which also happens to be the low. It doesn't indicate anything, but that's where price stopped yesterday. We could just completely collapse out the bottom of that. So it's no different to any other level. New lows on the FTSE. Hoping I'm going to announce new lows on the DAX. Go on. Nearly there. That's not the DAX. Didn't quite make it. But we're not announced. We're not an inside bar. Basically, we're bearish. So if we can break that low, we hopefully will get a flush down to TP. This whole area here is previous resistance and support. So that is definitely achievable. But we're back at the gap where they bought up. So yeah, it's just a level at the moment. Yeah, it's not in the same way as that's a level at the moment, but that is a previous level. Yeah, so that is a very strong resistance now because it's been tested. So when you get a level formed like that, for example, it's only a level, just a price point where price turned. So we know that there's buyers there because price turned at that level. So the banks started the move from that level. When you get back to that level and you bounce again, you know that some of the buyers that are there are still there, i.e. they're still in these longs and they want this to go long. Whether they get run over or not is anybody's guess. But if they don't get run over, it's going to bounce again, which is what happens in a range. Yeah. So ranges form at support and resistance, roughly. It's always rough. Everything's rough. Nothing's ever the same. So this is basically these guys that gaps up buying again from this level, but it's somewhere around here. It's never exact, is it? So just a level at the minute until it's tested. So if we come back down and hit this again, because this is basically potentially a bounce off of that low. If we hit that again, and then today we put a new high in, that is confirmed support. But not yet. It's like, everybody's got a different theory on support and resistance, and everybody's got a different way to play support and resistance. My old mentor, Kunal, used to teach me that if you knock on the door 3 times, the next time you knock on it, you're going to break it down. So if you get a triple top resistance and it has another run at that, do not try and sell it. Then again, I can show you many times where we've knocked on the door 4 times and 5 times and 6 times, and then it's collapsed because that is really, really, really strong. You don't know. there's no, and sometimes it will hit it once, hit it twice, and slam through it, and then use it as support, and off we go, new market structure long. There's a million different ways to trade it. We've got a massive storm coming, by the way, in the UK. Where I am on the south coast, we're going to get hit the hardest, 85-mile-an-hour winds over the next 24 hours. So if I'm not on tomorrow, you know why. It'll be a power cut. New lows on the FTSE. DAX is stalling out down here. What's my NASDAQ doing? Going to reduce the hedge on this because I'm assuming that propulsion gap test is going to hold. Nextly, your opening range breakout EA that I recently purchased doesn't function. It worked when I first downloaded it. It's not the EA that's not functioning. It's something with your settings that isn't functioning. Things don't break. It won't just stop working. I don't know the answer to that one because there's 1,000 settings and I've no idea what they are. So have you changed the times? Obviously your broker time has changed, maybe. Have you changed the times in your settings so that they now are correct? That could be the problem. You have to send me a message in Telegram. What is your risk per trade on the market reverse alerts EA? At the moment, I'm using 0.1. So I would either use 0.1 or 0.25%, dependent on how many instruments you're trading. Whether you're adhering to exposure rules, as I teach in the bootcamp, or whether you are trading everything. So if you're using exposure rules, I would use 0.25% per entry. If you are not following exposure rules, reduce that down because you're going to be taking 2 to 3 times as many trades. So you need to be in at least half the risk. Back test. Check for yourself, but 0.25 is default based on half an ADR. So all of my risk is based on half an ADR's movement. Yeah, so that distance is what I base an entry on. Just because you need to base it on something. Okay, so small pullback again out of the gap fill. We have made a new low though, so FTSE's come down again. So there's a lot of sellers at the moment, but not enough to really collapse. I just wanted to hit target so I can focus on FX because at the moment I'm constantly looking at that. It's annoying. Must be annoying for you. It's annoying for me. Right. So oil. No idea what's going on with oil. Morning, Brian. So at the moment we've hit that low. I am basically getting out if we break this low because that invalidates market structure. So what we were looking for was bullish market structure to continue and head up to that $100 to ridiculous forecasts of $160 a barrel, depending on who you listen to. But, you know, breaking that high basically is what we're looking for, isn't it? We've got a war on. Oil prices should be going up. At the moment, what we have done is we've gapped up and we thought, wow, this is brilliant. So we took the gap fill long, which was fantastic, expecting market structure to continue up to that high. We didn't. What we've done is collapsed down for 2 weeks, now back into that low. So we seem to be forming a range out of that level at the moment. So that low is basically what I need to hold up. If that low breaks today, it's Wednesday, so we've got oil inventories at not 3:30 anymore, is it? 2:30 now. This week, yeah, 2:30 oil inventories this afternoon. So that's an hour after market open, obviously. So we've got oil inventories this afternoon. So that will obviously give oil a kick. So I'm hoping basically we just hold this level and the oil inventuals will break that high, we'll get an ADR hit, and off we go, and we'll start a new leg up. Even if it's just to stay in that range, that's fine. I don't mind it. My break even basically is 84.5 a barrel. So I just need it basically to be above 50% of that range, and I'm out. That's where I'm going to get out. Basically, I'm giving it pretty much 3/4 of an ADR, and then I'm scrubbing those two positions for 1.5% loss, and then I will have to decide what to do with the others up there, based on what we get down here price action wise. If we start breaking down below this $78 a barrel, there's something fundamentally wrong. We've still got restricted supply restrictions from OPEC. Russia's still restricting supplies. We've got a war on, which is good for oil. There's absolutely no reason oil should be coming down. So this is just a manipulation move at the moment, I think. And we're just holding at the moment. So I think there's a good chance this will form a low. But as you can see this morning, price action's not very convincing, is it? So DAX is out the lows. TP's hit. No, it's not. Sorry. I lied. It's on its way to TP. I'm just going to close one on this other account because it's a prop account. So I just need to lock some profit in. I'm going to let that second one run. But here, obviously, we're on our way to TP. Just want to watch this price action because I don't want to let this go this morning. NASDAQ should hopefully be out. Here we go. So I held that hedge overnight, so basically $340. So I need to change that in here to be 342 because I need to make sure this trades this afternoon. That won't trade this afternoon if I don't adjust that figure. So that's good. I'm out of that NASDAQ. On our way to TP. I'm going to close it, Manny, just because I can't be bothered to watch it anymore. So there you go, 700 banked, runners on. So 5R runner to the downside is... I mean, the downside target is gap fill. So if you really wanted to go for it today, assume we're going to get a bullish FOMC and we're going to get a drop on the US indices this evening, you could go for a run all the way down to there. I am going to adjust mine up slightly just into these lows, which is this propulsion gap, because we bought that 4 times yesterday, that move. So we know there's a lot of people sitting there buying. So it makes sense that we're going to get a bounce. It may not be a bounce, obviously. It might just be a pullback. And if it is going to be a pullback short, I'm going to get taken out on a trading stop anyway. So it makes more sense to take your profit at the bounce point rather than take your profit on your trading stop. It's twice as much money, isn't it? So, so just moving up to 4 and a bit R short. There we go. That's done. Right. So that's oil. Hopefully that rallies today. US dollar yen. So these yens, your guess is as good as mine. Obviously, the Japanese have come out this morning and said, yeah, we're going to intervene. I'm 100% sure they will intervene. How that intervention will come, don't know. But this is too much for them. They were obviously expecting a drop in the yen. They knew it was coming because of what they said yesterday, but I don't think they thought they were going to get 350 ADR move against them after we had that lovely 175 ADR push in the yen. So in total, this has moved 400% of ADR in 24 hours, which is a huge move against the yen. So that's on the cards. I suspect as a bare minimum, they'll put in a 300, 400 ADR move. Problem is, it's FOMC day. I'm not sure whether they would want to do something ahead of FOMC, because if the US dollar weakens anyway off the back of FOMC, it means there's less intervention they need to do, because intervention costs them money. Don't forget, they make more money having their cash overseas. So if they have to bring it back into the end, they're suddenly going to start making a negative 0.1 interest on it. So it doesn't make sense for them to do it. They don't want to do it. They have to do it. So there's a potential, obviously, that this could drop on FOMC, in which case then it becomes less likely that intervention will happen. But as we know, and we've been sitting in here in the live room, haven't we, and been watching other things, and everyone screams, look at the yen, look at the yen. It can happen like that. It does happen just like that. It'll be gone. I'll be sitting here all of a sudden, then we'll be down there, and I'll be like, oh, there we go. There's the intervention. So just be aware, this is on the cards. They pretty much, as damn it, confirmed it this morning. We're intervening. We're not going to comment on it. We're not going to tell you we've done it. It's going to happen. We're going to deny it. And everyone's just going to go, yeah, it's what they do all the time. Just the norm. So just hang on to your hats. It could go either way. We don't know when the intervention is going to happen. All we've got to go on is history. And the last time they did it was 152. There, 800% of ADR. We are within a gnat's whisker of 152. Yeah, 152 is ADR. So ADR today is 152. So if the US dollar rallies today ahead of FOMC, or they decide to sell the crap out of the yen for any reason this morning, we're going to be at 152. That doesn't mean that's where it's going to happen. All I'm pointing out is that's where it happened last time. That was the first intervention. That was the second intervention. That was the third intervention. That was our first intervention. Yeah, it's just the same pattern repeating. So we'll see. But I added 2 more shorts yesterday. One at the weekly high, one as we pushed up, basically at the 151 and a bit. So basically just spacing them out nicely. I have a plan to add another one at 152 if it gets there. Then I will decide what 152 based on price action, what I do next. I'm either going to take a loss on this, or I'm going to basically just get out of it and then not trade for the rest of the month because I'm done. Don't know. We'll see. But my targets, I've got 2 targets down at intervention low, which is 147.350. And then obviously, if we put the 800% ADR move on there from that level, we're looking at a move down to somewhere in the region of there. Yeah. So if the intervention happens full size as it did in October last year, that's where we will be sitting within 8 hours in a day. So I've got targets in that propulsion gap, and I've got targets at the intervention low in case it's just a tiddly one like it was last time. So a lot of people out there are still skeptical about intervention, but you know, I go through this every day, and I have been going through this every day for the last 2 or 3 months as we've been moving up. And every time I say they're warning us that they're going to intervene, and then that happens, somebody says, that wasn't an intervention, that was something else. Oh, sorry, but prove it. It's just what happens. We know it happens. And this is why they come out and say this, yeah? As soon as they do an intervention as well. I don't know why people are skeptical about it, but as soon as they do an intervention, they come out the day before or the week before, they're going to do an intervention and say, we're watching this. If you carry on doing it, we're going to do something about it. Using the word intervention, right? And then all of a sudden there's a massive move down and everyone goes, that wasn't an intervention, that was something else. It's like, well, but then the day after the intervention, the Japanese came out and said, we're not going to comment on the FX moves and we will not confirm or deny an intervention. I don't know how else to prove it, but that's what happens. So we're waiting, obviously, on that. So I have lots of shorts on that. I'm not in a lot of drawdown on it at the moment. And if we get up to 200% of ADR, I'll only be sitting in 2% odd. So it's not going to be the end of the world. They're not going to intervene the other way, obviously. So we're not going to get another one of those. Well, I've not seen another one of those, put it that way. Like, anything can happen in this market. Every time you go, well, it definitely can't do that, you'll be surprised. It does it. So you can't rule anything out, but it's highly unlikely we would get another 100, 200, 300 ADR move against us. 100 maybe, but more than that, it's going to be very difficult. Market's not got any more yen they can sell. They're out. So, yeah, we'll see what happens on it. But as I said yesterday in Telegram, do not be surprised to see us on a 50% retracement of this by the end of the day. Yeah, 150 ADR today, 50% retracement move, highly likely. Go back in history, look at the other days we've had 200 to 300 ADR moves. Look at what happened within 48 hours after it. Every time we've retraced a minimum of 50% if we haven't done that. So it's holding at the minute, but I wouldn't hold it for too long. US dollar Swiss, first entry yesterday. That was an H1M5 mean reversion entry there. New Zealand dollar, US dollar. That's just sitting sideways. I have gone nowhere on this thing for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days now. Range. So just I'm in it long. I'm waiting. Nothing's happening. New Zealand dollar, US dollar. Big push up on the indices there. I think I'm out of the DAX. No, I'm not. Still in. Still in second half. So that's New Zealand dollar, US dollar. Pound Swiss, first entry yesterday. H1M5 mean reversion. So just waiting for that to do a profit take on that move. Euro New Zealand. So this one I've been in forever. The New Zealand dollar has powered up off the back of that news, which is fantastic. Talking about support and resistance. There you go. Prime example. Knock on the door, knock on the door, knock on the door, knock on the door. It can knock on the door as many times as it likes. That's what a range is. Once you get into a balance, this is what the institutions call a balance, which is an area that both institutions or all institutions are happy to conduct business. We're happy to trade the Euro New Zealand within this price range. You get a break of balance, which is called price discovery. Price discovery then either succeeds with a break and bounce, or it fails and comes back into balance, and then you tend to go the opposite direction. So we're just waiting for the first price discovery move outside of this level. Could go either way, but hopefully down. My average is absolutely miles away on this. It's 175 ADR. So because I've been in this again for pretty much 2 weeks now, I'm just hoping they break to the downside. There's more chance of breaking to the downside. We've got lots of propulsion targets to the downside. This leg has had no profit take move done. If you look at that, that's a 23 retracement, which is a flag break. The flag broke and didn't actually get anywhere. So we've hit that resistance. We're holding that resistance. So the next direction for me is propulsion gap fill, 50% retracement, or a 38. You see, I've got the fib on here from yesterday. Look, yeah. So 38 retracement, 50 retracement, 61.8. So shallow, medium, deep pullback on that move. Just waiting for them to actually do something about it. Euro Swiss, first entry short, and that one yesterday, same as the pound Swiss, H1M5 mean reversion, just looking for a pullback on that move. So looking for that profit take to kick in. CAD Swiss, again, another one been in for a while now. We have broken up. So all of these Swiss franc trades that I'm in at the moment, when I got into them, they all looked really good. They looked like they were nice pullbacks. So we obviously identified that area of resistance. Again, talking support resistance, we identified the bounce point there. So support, 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 break it, resistance, 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 resistance. Yeah, it's not a myth, it's real. So that is the area we looked to bounce from. And potentially we were looking for the Canadian dollar to rally on oil. And what happened? Oil tanked. So we lost all power in the CAD. And at the same time, we had conflicts kicking off, which meant the safe haven run started and the Swiss franc powered up. So this just basically became an A-shaped recovery. So we're looking for the profit take move on that short and them to pile out of that Swiss franc. And we're looking for oil to power up. So as long as we do get that move up on oil, and we do have them coming out of that Swiss franc safe haven run, there's no reason why this shouldn't rally. But obviously the downside is escalation in Middle East means more safe haven. However, it should mean bigger oil moves. It's just not doing it at the minute, is it? We're stuck for a week. We've not got any directional bias yet. We're stuck 1, 2, 3, 4, 5, 6, 7, 8 days. So this is the price discovery move. So we're either going to discover, accept, and rally, or we're going to fail. If we fail, probably going to drop. So again, it's only in 0.71% of drawdown at the moment, so nothing to worry about. Aussie New Zealand got a good move on this one this morning. We're holding up at the lows again. Support. Yeah. What the hell was that? Oh, that was the news, wasn't it? It's 9:45. No. Yeah, that was the news. That was obviously a precursor to the news. Big old candle there. It's pretty much an ADR, isn't it? Yeah, it's 150 ADR, that candle. So that was the news, basically, and then kind of undone itself. So, but anyway, I'm short on Aussie New Zealand at the moment. Waiting for pushback into this area here, basically. So again, balance, price discovery. We haven't retested it yet, and they just went. We had news shifting, which is why this obviously is just ground up. But yeah, looking for it to push back down. Got to break that low though, and that, funnily enough, is exactly my average. That support resistance line is my average. So it's bouncing off my average price, which isn't great. But anyway, so short on that at the moment, but that is just stuck. Aussie dollar Swiss, second entry on that one yesterday. Sorry, this morning. Get it right. So second entry this morning. First entry was the H1M5 mean reversion entry. We pushed up. We retested that high. I got a second entry on that one this morning. So average is there. Just need a little bit of downward movement on that. So I'm hedged on the Swiss franc at the moment. Oh, wrong button. That's, oh, you're kidding me. Look at that exit. Broker. Spread. Right, look at that spread. There isn't any. What happened when we got there? They spread me out. Stopped out. So 760 this morning. Didn't even bloody trade there. Love brokers. So yeah, Aussie Swiss. What I meant to do is that. I'm hedged on the Swissy. So that Aussie Swiss that I've got on short is part of a long, and I've got obviously another Swiss franc where I've got short bias on it. So I don't really mind which way it goes. I'd like the Swiss to power up. Obviously, that brings that down. So, so I got 2 on that at the moment. First entry. We're coming up to a resistance on this. Well, potential. So this low here, where we basically just sat around. This was the low of the range. We finally broke through that level. This is our first retest that we're coming up to of this area. So we might find that the sellers that started this move that are short still want to remain short. Failing that, we're going to go back into that price discovery. We've obviously got a high there. We've got a low there. Yeah, so any of these levels can act as resistance to start and move back down to the downside. And obviously then we're going up to monthly highs. So, but we've had no profit take on this move yet. So looking for a pullback on that entire move to get a new leg up. Yeah, so similar to that in reverse, obviously. And the only other thing I've got on is Aussie dollar CAD, which is first entry yesterday. H1M5, sorry, no, first entry was on Friday. H1M5. 3 days sideways. Looking for a pullback into propulsion. There we go. So that's my positions. Gutted. Can't believe that took me out at DAX. on a pullback. This is why break-even and trailing stops don't work, people, because if market structure is going to continue, it is going to pull back. And if it is going to pull back, it is going to pull back to your break-even or your trailing stop. And then it will take you out and carry on in the way you thought it was going to go, which is to the gap fill today. Do not use what I teach. I'm still in over here, though, which is the good thing. So to the prop firm account, that one's still short. And I'm out of the other one as well. So I've got 3 accounts running the strategy at the moment. So overall this morning, by accident, a grand profit. I can live with that. There we go. Nice way to start the month. 42% last month. Oh, took a lot of trades last month. Holy crap. 42.9, 43%. I did a quant analyzer of this yesterday. Just to have a look at it. Because I wanted to see how much money I made on each instrument, because that's the first full month running the stock index hedge strategy. So that is the first full month results. Running it properly with the launch candidate, if you like, of the EA. So this was the month 42.9. So as you can see, you probably can't actually, but as I can see, the NASDAQ did 1,730. We did 12.5 on the S&P, 16 on the Dow, and 12 on the DAX. So the NASDAQ was the one that did the worst. It still ended in profit, but it was the weak link, if you like. So, yeah. Pretty good. You see the DAX is this, the NASDAQ is this purple line here. So a lot of flat line on the NAS, and all the other indices working well. So this is a good indication of, all these EAs you see out there that are single instrument EAs that only are one trick ponies. They only work on one instrument. If that one instrument has a bad month, you have a bad month. If you diversify across multiple instruments, that gives you a smooth equity curve. So none of them were amazing. Maximum was 16%, lowest was 1.7%, but overall, portfolio was good across all 4. So yeah, pretty good. And these ones, look, these 8 hours, anything over 8 hours, basically, is exactly what's happened this morning, that NASDAQ. If you remember, I had one trade, which I did exactly the same as today. I accidentally didn't close out, so I had to hold it into the next day. Look at that, loss. Those are the ones, if you don't close them out at end of session, most of the time they turn into a loss. So this backs up all my back testing that I did that showed that end of session close is when you close. If you hold it, it's not going to help. So that backs up the data that I had from all the back testing, which is good. There you go. Right. That's all I've got for you today. So if anybody's got anything else, let me know. Mark, oil can collapse for you. I'm putting in an order for my new car, and it's a bit thirsty. Yes. I'm electric. So I'm a long-term Porsche owner, so I know your pain. Petrol. I've had 2 911s, and I've never experienced a needle go from there to there just to go shopping. Phenomenal, isn't it? When I'm risking 1%, 0.1% per trade, for me to target around 0.25% in profit, it seems to always require more than an ADR of movement. Yeah, it will do. Think about what you've just said. Think about the maths. If you get in, so there's ADR high, there's ADR low. If you get in there and you are risking 0.1% on half an ADR in the positive direction is going to be what? 0.1% of profit. Yeah. So you only need half an ADR movement to make that, but that will take you down to ADR, obviously, today, because if you're taking trade in the middle, blah, blah, blah. So moving to one ADR of movement from your entry, which would be, in this case, 150% of ADR, is 0.2% profit. So a one ADR move from your entry price will bank you 0.2%. It's going to bank you double what you risked, obviously. So if you're trading with a 0.25%, that would bank you 0.5% by moving one ADR from your entry point. The idea is you're not looking to bank a percentage. Forget about money, forget about percentages, forget about risk reward. It's irrelevant. For position trading, what you're looking to do is get into the market and get out where you think price is going to bounce. Forget about the money. Let the money just build over time. Yeah. If you say, I'm not going to get out with less than 0.5% profit, if 0.5% profit is there and you're looking at a 61.8 pullback on a long position being there, you ain't going to hit it. So no point in targeting 0.5% if it's more likely price is going to bounce at that level because of that propulsion move or that propulsion move. Yeah. This is going to continue in bullish market structure. Where's it going? Yeah. Down. Then it's going to bounce up. It's not going to invalidate that low. So if you think this is going to continue long, that's nowhere near it. You shouldn't be targeting that. Think of a fib. Think of what price does 90% of the time. It pulls out of somewhere between 1/3 to 2/3 of its position, 38 to 71.9. So if you're going to pull back, it's going to be in that zone. This is an if that's going to happen. If that's going to happen, doesn't matter. But if that's going to happen, you should be targeting here as your conservative, there as your aggressive. If that is 0.5%, forget it. The only way you're going to achieve 0.5% is if you get an A-shaped recovery on that move. If it's going to be market structure bounce, you're not going to get more than a 71.9 because more than a 71.9 is pretty much an A-shaped recovery. It's not a market structure move. Your risk is based on 0.5%, half an ADR of movement. So half an ADR of movement in your direction will be exactly what your risk is. But if you put too much risk on, you're going to go into too much drawdown too quick, which means you're going to hemorrhage cash and you're going to want to get out of it. It's going to put the pressure on, you're going to worry about it, and it's all going to become a panic, which is basically the same as using a stop loss. The whole point of position trading is tiny risk, tiny reward, but tiny reward 99% of the time. Yeah, that's what it's all about, is constantly making your P&L green. Wrong one. Yeah. So the idea is you're banking a little bit every day where possible, which builds up an overall profit constantly. You're just getting in, you're waiting for these to go green. When they're green, you put them down there. When they're red, you wait for them to go green, and then you put them down there. It's a waiting game. The whole thing is about, somebody said in the Telegram group yesterday, I can't remember what it was, but it's something to do with patience. I think it was Peter said something about it yesterday, but you don't realize until you're doing this and you've been doing this for a month or two, how important patience is in trading, because look at this Euro New Zealand trade that I'm in at the moment. We hit that high there. So call that day 1, 2, 3, 4, 5, 6, 7, 8, 9. For 10 days, I've been watching my P&L on the Euro New Zealand flick from somewhere around about 0.8% to somewhere around about 2%. I've been just watching it for 10 days, 2 whole trading weeks, going like that. Got to be patient. And if you use high risk, it means you want high reward. If you want high reward, position trading isn't for you, because that patience in a squeeze will turn into panic, and that panic will turn into loss. So it's all about keeping it tiny. You should be able to press the button, walk away and go on holiday for a week and come back and not give a monkeys about that trade. Yeah, if that trade, when you press the short button, went against you for ADR, you should be able to come back from holiday and go, I'll add another one. Because it should be such a small amount of money, you couldn't give a crap. If you're worried about something and you give a crap when you press the button, it's over leveraged. Morning, Leshy. Yes, you are late. Russian person whose name I can't pronounce. What strategies do you trade on a real account with the expert advisor? H1M5, this one. I only trade H1M5. Doesn't matter what you trade though. Choose one. Doesn't matter. From the Bootcamp, they all work. They all have advantages and disadvantages, and they will all suit different people. Or use your own. Doesn't matter. Just use the position trading methodology, which is basically tiny risk, multiple times, scale in, scale out. As long as the market moves like that, however it wants to move, yeah, like that in a trend, yeah, we make money because we are mean reverting every move that happens. So every time there's a move, it will have a profit take. As long as there's a profit take, you can use any indicator in the world. Stick a Bollinger Band on this. What have you got there? Price above the Bollinger Band. Short it, get out. Yeah, use a Bollinger Band, use a CCI, use a MACD, use an RSI, use a stochastic if you really want to be desperate. Use anything you like. Doesn't matter. The methodology is the same. We're all about scaling in and out on market movement. We don't know what the market movement's going to be, so you can't predict it. If you can't predict it, don't get in with something that's high risk. XR8.news morning. Couldn't get past the snooze bar. Going to go back and start from the beginning. What? What's the snooze bar? Wacky. Have I missed something this morning? DAX is just down at the lows. Retesting low of the day. FTSE's doing the same. So I'm just going to lock in a bit more profit. The one that I've got running, this one, I'm just locking in. There's my entry. Look. So as we've just retested this level, if we're going to continue down and we're going to need to retest this level, I'm just moving the profit down into there, just locking in a bit more. We shouldn't invalidate that high. If we do invalidate that high, we're going into a range. If we're going into a range, I don't want to be in it. So it's either going to break short from here, in which case I can lock that in confidence that if we break that level, we're not coming back here, or not. There we go. So next stop on this. So this is the test of that high look. Yeah. So that area I pointed out this morning, resistance, support, retesting it. It's either going to hold, they're going to buy it again, or in all likelihood, as we're bearish market structure today, we're going to break that level. If we're going to break that level, we are going to come and test that area, which is this propulsion gap. And that was where my TP2 was. If you remember, I moved it up into that propulsion gap. So that's where I would expect us to start to find some buyers today. If we break this level, we've got to do first. And the FTSE's trying very hard. Still not able to. So we're still buying this level up. You can see by the wicks, look, every time we run into this area, we got long wicks, which is basically meaning there's an iceberg order sitting here, absorbing every single sell order that gets put into the market. They're just absorbing it and saying, bring it on, bring us more. We got loads of money. Just keep chucking it at us. And eventually you'll give up and we'll go that way. So either we need a large whale to come along and go smash straight through that iceberg, in which case then we'll be down And the guy that was that iceberg will suddenly flip short. So when we break through it, he will then add it to the shorts and drive it down. One of them two things is guaranteed to happen. It will go up or it will go down. Watch. I can guarantee you with 100% certainty that is going to happen. Morning, Oliver. Kennelly, I missed your message. You put a message in, then you retracted it before I got to it. Mark, those 3 trend lines on your charts that print every day, do they redraw throughout the day? Or is there a cutoff point? What 3 trend lines? Not sure what you're talking about, Mark. Which? Three trend lines. I don't use trend lines. I'm not sure what your meaning is. Trend lines. I mean the fibs I just drew. 3 horizontal trend lines in the objects list. What? Which platform? Stock indexes or FX? We're going to have to go through this logically so that I can identify what you're meaning by trend lines. I don't use trend lines. Horizontal lines. FX, yeah, I'm here. 3 horizontal lines. I've got way more than 3 horizontal lines on the chart. Did you mean the fib that I just drew? That's more than 3. It's not the fib, is it? I don't know what you mean. They're Asian range. I don't have Asian range indicator on the chart. No fib. They are grey. These ones. So these are completed propulsion gaps. There's more than 3 of them. There's hundreds of them. Those? Is that what you mean? No, not prop gap. Do you mean these black lines? These ones? Sorry, these are black, but yeah, I see what you mean, grey. Oh, you're using the old template. Yeah, so I did have an indicator that drew in the Asian session, which had, I don't use that anymore. I can't remember what it was called. SM work time, I think it is. I think it's that. It's Steve Malraux's work time indicator, which draws in the Asian range. So on this, it's yellow. You can't even see it. Let me make them something hideous. Magenta. There we go. So it would be these, yeah? These dotted lines. So this is it's called the work time indicator. So this is just basically a sessions indicator. So this was indicating the Asian low, Asian high, and Asian midline. I don't pay any attention to Asian session anymore. It was nice to see the sessions, but you know, you can say it might bounce off the Asian high, but it might bounce off. You know, it's a resistance. I don't need to have them on the chart. I just don't use them. It just it's just clutter. It's more clutter to me. It's not something I really use anymore. I haven't used it for a while. But that's what that is. It's just the Asian high and low and midline. There's a lot of theories out there. So one of Steve Malraux's theories was he used to look for breaks of the Asian range. So he would have I'm out of the DAX now, by the way. It is pushing back up from that low. So there you go. So that iceberg order sitting there, he's basically held. And the market can't get any higher. So I'm out there. Yeah. So either we're forming a W pattern reversal here, and we're going to come back up, or we are going to put in a new low, and we're going to have another run at that low, or it's going to range bound. That's it's done anyway. So yeah, so Steve's theory was you have the Asian range, and during London, price will break out, and it will get to a certain area, which is basically what was a kind of a kill box, and then it will bounce out of that kill box. The trouble with that is he used a pip value, and this is where a lot of Steve's work falls down, unfortunately, is he used pips, and I very quickly discovered that pips were useless because the pips are different on every instrument. So this instrument has an ADR of 130 pips. That instrument's got an ADR of 53 pips. That's got 85. That's got 126. That's 117, and so on and so forth. So everything's got a different average daily range. So if you target 50 pips above the Asian high, yeah, on an instrument like the Aussie New Zealand, it's got to do an entire ADR move just to get to the box. On an instrument like the Euro New Zealand, it's going to do a third of an ADR to get to the box, which means it can overshoot it a lot. So I found that Asian range was useless. It's useful if you want to try and trade the London breakout strategy, but that has been proven by 1,000 people to be a complete load of crock. Doesn't work. There's a million ways you can trade the London breakout strategy, and everybody's got a different take on it. And they'll all sell you a completely different course telling you how to trade the London breakout. At the end of the day, when it gets to the support and resistance levels of the Asian high and low, it's got a 50-50 chance of bouncing or breaking. What they don't take into account is the size of the Asian range. The Asian range is 3/4 of an ADR, and you get a breakout to the upside. It's not very likely to go very far, is it? Because it's done 3/4 of an ADR. So if you want to trade the Asian range breakout or the London breakout strategy, you need to have some kind of measurement of the Asian range and have a rule set that means I'm not going to trade it if that range is bigger or smaller than a certain level. Hence the stock index hedge strategy. Yeah. We work on a rule set of 10 to 20% of the average daily range because we know that anything less than 10% will whipsaw too much, and anything bigger than 20%, you'll find it hard to actually get to a target. So if you apply that methodology to the London breakout strategy, I'm coming up with a strategy here. It will probably start to work, but no one teaches that because nobody teaches ADR, because nobody bothers about ADR because they don't care. They just want to sell you something about do this and it might work. They don't think logically about what the market is moving, how it's moving, why it's moving, who's moving it. And if you think about that, you will realize the Asian session's got absolutely nothing to do with London, because when the London session opens, if there's a news event, that thing's going to go 200% of ADR. It's got nothing to do with the Asian range at all. The fact that the banks sold at the Asian high here and the Asian low there, for example, made no difference at all today. It could have done. Sometimes it will. But all that is price action, indecision by the market, because it doesn't know which way to go. It's building a book. The market on the Asian session is building a book by trapping traders long and short, and then the value of that book will determine whether there's a breakout and which direction the breakout is. If the banks and institutions at the London Open have a book which is 1.5 million short, they will take it short because they will make money. If they take it long, they will lose money. So therefore it goes short. Nothing to do with those lines. They're lines on a chart. Banks and institutions don't even know you got lines on your chart. It doesn't make any difference to them. Where price has been in the last X hours is just where price has been in the last X hours. Has that got anything to do with whether there's a bigger volume of sellers or buyers at that line when we get to it the next time? No, nothing. Doesn't make any difference whatsoever. So you're just putting clutter on your chart. But if you're going to trade a strategy that relies on a breakout of a specific level, that Asian range indicator is actually pretty good, pretty useful. But you need to make sure that it is small enough or big enough, or not too big and not too small. There's got to be a Goldilocks zone. You can probably test it. Go back and look at the Asian range. You want to pick an instrument that's got a big move in the London session, like the pound. But something like that. So that's that Asian range. The Asian range today was that. Yeah, so that's about 2/3 of the size it was yesterday. That broke to the upside yesterday, but look at it. 1R, if you're lucky. Today, it's broken to the upside and it's come back down again. So some people teaching you the London breakout strategy will be saying, take the second break. Whoops. That didn't work today, did it? Some people will be saying to you, take a reversal at the high. So far, that's in profit, but hasn't got anywhere, has it? This is whether there's various. They call it the London breakout strategy because the idea is you take a breakout, but then other people teach you that you only take a re-entry short. Others teach you to take a re-entry long. What is it? It's all 50-50, isn't it? Everything they teach you, regardless of what that strategy is, at the point you press the button, it's either going to do it or it's not. The thing is, you've got to bear in mind is there a way for me to make money out of it? The only way you can make money out of it is by having a higher R than your risk. In which case, you've got to have a range which is small enough that allows the average daily range of the instrument to hit a target. So it's all a load of crap, everything that everybody teaches you, because nobody's concentrating on the one thing that this thing does every day, which is move a specific distance. If you are up at that level and it's 150% of ADR, the chances of that resistance holding and bouncing are way higher than if you hit that ADR, that resistance, and you've only moved 10% of your average daily range. There's a hell of a lot more buying power available to you than if you've done 150% of your normal buying power. It makes a massive difference to everything. But anyway, that's what those lines were on the chart. That was a long-winded explanation for a couple of lines, wasn't it? On the DAX, my ADR isn't yours. You will have different ADRs based on your broker. So mine is 173 there. On there, it's 197. So that broker is 197. This broker is 173. This is 186. Same broker, different account types. But it doesn't matter. Yeah. The number is irrelevant. That number is totally irrelevant. That is the average distance your broker has shown you that this thing has moved in a day. Yeah, that is the average. Whether it says 196 or it says 176, it's the average that your broker is showing you. You are using your broker's chart to plot those levels. Therefore, that's what you pay attention to. Trade your charts, not mine, because your broker is giving you different data to me. Whether you're trading the cash here, or you're trading a different CFD variation, or you're trading the futures market, you're going to get different prices. Trade your charts. They're the same. An average movement is an average movement. That price has got nothing to do with it. It moves that far in a day. It's a line on the chart. Don't worry about the numbers. It doesn't matter. And everything's just completely woolly anyway. Yeah. ADR is ADR. Did Price pay any attention whatsoever to ADR on the US dollar yesterday? No. We got to ADR and it went, screw you, I'm doing 300% of that, 350% of it. Doesn't matter. Most of the time it will pay attention to it to a certain degree, but this is what the percentages are here for, to tell you that 42% of the time we break that, which means that 58% of the time we don't break it. We spend 58% of the time moving up and down within the daily range. We break out of it to 125%, 23% of the time, 12% of the time we'll do 150. Yesterday on the US dollar yen was one of those days where we went beyond 225. That 2% of the year where we go beyond that level, there it was yesterday. Just a line on the chart. It's producing greatest signals on gold market, breaking high or low of those and mean reverts to the midline. Cool. If you found a way to use it, use it. I don't trade gold, so use it. If you can find a way to use any indicator, it doesn't matter. Every indicator on the planet lags, and every line on your chart that is support and resistance is a line where price has turned at before. None of it means anything. What it means is this is what's happened in the past. What's happening in the future, you have to base an entry on something. And if you're using that indicator that gives you the Asian high-low on gold, and you're finding that when it breaks out, it comes back to the mean, which is the midline of the Asian range on a regular basis, there's a strategy. Use it. Trade it. If it makes money, trade it. It doesn't matter what it is, how it works. If it consistently does something, that's all you're looking for. An edge in a strategy is literally a repeating process. That's what the stock index hedge strategy is. I know for a fact that around about a third of the time, this will clean break straight down to target. That's the edge. I've repeated this process over a decade, and it does it 35% of the time. There's an edge. I've got a 35% strike rate on something that moves twice the risk I put on. So I've got an edge. It makes money. That's all an edge is. It's something that repeats. And you just have to keep repeating it. And the times it loses 10 times in a row, you just go, yeah, it's done this before. I just need to wait for it to do the 5 in the row to get me all my money back, and then we'll carry on as normal. That's what dips in your P&L are. Your strategy working, not losing. And this is why everybody system hops. If you start the stock index hedge strategy there, you will dump it after a week. If you start the stock index hedge strategy there, you'll think you found the holy grail. And then you'll go, oh crap, it doesn't work. I'll move on to something else. But you'll miss that because you hopped. The Asian breakout that reverts to mean on gold will have an X% strike rate. If you don't play it for a month or 2 months, you won't see that play out. You'll just see that, but you'll miss that because you've gone, no, it doesn't work. The normal thing to do, isn't it? We hop. But I don't trade gold because I don't like it. There's plenty of instruments to trade. Trade what makes you money at the end of the day. Was my question about demo and real Was my question about demo and real insensitive? You didn't respond to it, but forgot. Sorry, I didn't see your question. Just wondering if you're testing the stock index hedge on demo. No, it's real account. I've got it running on two accounts. I've got it running on 3 accounts, basically to test different spreads, different slippages. And I'm also running it manual as well to see what, I'm just curious to see what the difference is. But I get very different results. So this account here, and this account here are with the same broker, but very different results. Whoop. Can't see, I can't put it in the right place. So this is a Prime account with Robo Forex. This is an ECN account with Robo Forex. Different spreads, different slippages. It's just different. Yeah, I'm getting very different results on different accounts. The results are the same in the fact that we have win days or lose days, but the results are very different in their returns. And on the demo, I've got this running on, which you could kind of, mind you that I'm doing manually, so I can't really equate that. But on the demo account that I've got it running on, the execution is like that. It's much better. And that's why I'm testing it on demo, because whenever you do any testing in the strategy tester, you are getting the ultimate perfect conditions. You are getting exactly a 2-pip spread. You are getting it executed at exactly the price you want. You can simulate slippage and everything with tip data. You can simulate all of the slippage. You can set all the spreads differently, etc., etc. But at the end of the day, it's executing as if everything was perfect. I've had days where we've been sitting in here, and as the market opens, my terminal's frozen. And I haven't got that day on. That day was $7,000 win, and I missed it. So you've got to test it on different things. This is forward testing, which is why I said, you know, I'll shut it down. But the quant analyzer I just showed earlier, that's the first month of proper full live forward testing. Me using the EA and trading with it every single day. So, but you're going to get variations. Some brokers have pre-market data. So if you look at this account on the DAX, so this is the prop account that I'm running. Oh, I can't really do this. So look at this DAX with this massive gap. Look at this DAX with all of this pre-market data. ADR is different. That's 173. That's 197. ADR is different because you got pre-market data. This is all going to make a difference to your results, which is why backtesting is only ever going to be a rough indication of what could happen. It's there to prove an edge, and it's there to, the main reason for backtesting is for robustness testing. So I use it mainly for system parameter permutation testing. So I want to know, if I get in to this trade, if the range is there, or there, does that make a difference in whether the edge is long-term there or not there? Because different days I'm going to get slipped different amounts. So I'm not sure where I'm going to get in. So test it with a variance. And the variance has always got to be somewhere between 10 to 20% on a setting. So move that one. Let's look at the Dow. No, let's look at this one. So this range here was tested. I also tested that. I tested that. I tested that. And I tested that. Because I don't know where I'm going to get the order placed. So I need to make sure that every single one of those all produces a profitable result. Then I need to see, does it prove a profitable result if I take a 1R? A 1.5R, a 2R, a 2.5R, or a 3R. If they all produce a profitable result, that tells me that that is robust. Doesn't matter where you target. You could target there or there. At the end of the year, you'll come out with a profit. What if I use a trailing stop, which is 1R, or what if I use a trailing stop, which is 2R? What difference does that make? Doesn't make any difference. It does make a difference in the return, but it doesn't make a difference in the fact that the strategy works. So I know that it's robust in the fact that I can take any break at any level and it still makes a profit. I know that I can target any level, and yes, I'll have a totally different strike rate, but the ones that I hit less often will be much bigger and still provide an edge. And it doesn't matter if I use a 1R or a 2R trailer, it still gets me out with a profit. Because the edge of the strategy is one thing and one thing only. At the open, there is an initial fast move in price. When that happens, we make money. When it doesn't, we wait until we can see where price is going, and then we look for an exit, the hedge. That's the edge of the strategy. So backtesting showed me that it's robust. It didn't show me what I'm going to earn. It didn't show me what I should be using. It showed me that it didn't matter. So that's why I took this one off today, there instead of there. Yeah, it would have hit my target, but with spread, it might not have got me out. Yeah, it could have come back and I could have gone, screw it, I'll close it there because it looks like it might go into loss. So I'll just take $200 today. I didn't. I could have done, because it doesn't matter where you take the profit. It works because the edge is not the fact that it gets to there, gets to there, or gets to there. The edge is the fact that it moves bloody quick at the open. That happens every day. That edge is never going away. As long as the market has an opening bell, the edge is always going to be there. That's what back testing's for. And this is what forward testing's for. Can I reproduce what I reproduced in back testing here? What I've actually done this month is produced way more than I produced in back testing because I'm doing it, not the EA, because the EA is stupid. The EA today would have gone, I've hit target, I'm going to leave my target at 5R. What I did was say, I'm going to move my target down a little bit because this looks like it's bouncing off of this area here. It looks like there's an iceberg order there. EA doesn't have a fucking clue what an iceberg order is. I do because I've been trading for 15 years. So you've got to forward test using the edge you've got, but use your head. And your head is never going to give you the same result as a back test. Because you are the trader. The EA is a blunt instrument to execute a strategy on your behalf. That's all it does. And you will get different results, which is why I'm testing it on forward testing on 3 different platforms. And as Brian's just said, Hedge prop firm, I'm testing it on ACG, which is Alpha Capital. Only because they gave me an offer. And I've done 5.18. I've done 1.8% in the last 2 days. Well, day and a half. I only started it yesterday. No, we're on Wednesday. Started it Monday, so 2 days. So 1.7, 1.8%. So no, sorry, that's not right. It's not 1.8% because it's a 5K, a 50K account, not a 100K account. So I've done 3.6%. So I'm halfway to target. But I only went with Alpha because they gave me a discount. Got to go with someone. And I'm dipping my toe back in the water because I've lost faith in prop completely. Good morning, Blue Trader from Pontevedra. Hope your weather is better than ours. It's absolutely peeing down here, and we've just got a storm coming with 85-mile-an-hour winds. It'll be fun, isn't it? So I just saw something coming in. I didn't see what it was. It wasn't news. It was obviously, I think it might have been a Facebook notification. Anyway, I'm done for the morning, I think. So keep an eye on this yen today. UK manufacturing PMI has just come out at 44.8 on a 42 forecast. That is 45 forecast. That's negative pound. Negative pound news. It's not big news anyway. So yeah, watch this yen today. I just have a gut feeling they're not going to make a move on this today because it's FOMC. I don't think they will move it. It's snowing here. Where the hell are you? Snow? I remember snow. I used to have that when I was a kid. Before we blew the planet up. Yeah, I don't think they're going to make a move on this today because it's FOMC day. However, I think they will probably just naturally undo some of that long ahead of FOMC. So there's a chance I think we might get a decent retracement on this today. But I'm not convinced we're going to get a big move from the Japanese. So we'll wait and see what happens. But I think we might have to wait. Oh, you're in Michigan in the USA. Yeah, you're allowed to snow over there. I like that. Well, you're allowed it anywhere, obviously, but we just don't get it where I live. This doesn't happen. I've got the South Downs behind me where I live because I live on the coast in the south coast in England. So we have these massive hills behind us, and every time we get snow, it stops at those hills. The clouds pop on the hills, basically. So we don't get the snow, but the people over there, which are literally 3 miles away from where I live, they get snow. But we can't get to the snow because as soon as we drive up the hill to try and get to the snow, it gets too slippery and we slide back down. So I never see snow. It's very sad. We might get a little dusting like that, which basically by the time you've woken up, had your breakfast, looked out the window again, is gone and just turned into slush. So anyway, there you go. The joys of living in England. So yeah, I wouldn't worry about this. Well, not something to worry about, but I wouldn't expect this to happen today. But this evening, obviously, we've got FOMC. So once that's out the way, we've also got Macklem speaking later as well. So we might get some CAD move. But that's the main news of the day. So I'll be back this afternoon for the New York session. Prior to that, we've got the unemployment change. Doesn't tend to do a lot. And it's a precursor to the non-farm on Friday. So the main news, obviously, we're going to have this afternoon is going to be that this evening. So we have got PMIs later. So that is potentially impactive. But again, they're not going to do a lot of movement off of that ahead of this. So all news today, we'll probably find you might get a bit of that while we're waiting for that. So nothing particularly impactive. So I'll be back this afternoon at 1:20, sorry, this week for the New York Open. We've got a couple of earnings pre-market, nothing exciting. Everything else is aftermarket, and we don't seem to have an awful lot of impact off of the evening release. Market is coming down, obviously, but not dramatically. So business as usual. I think today is going to be one of those sideways days, as we quite often get on FOMC. So everything just kind of up, down, up, down, up, down. New Zealand dollar's rallying quite nicely, though, which is good because I've got longs on. Last 3 weeks, the weather doesn't change. Rain, rain, and rain again. And the forecast for the next 10 days is rain. That sounds like good place to live. Pontevedra in Spain. Is it Pontevedra or Yeah, it is, isn't it? How you say it? Yeah. Rain, rain, and rain. But it's warm rain, isn't it? It's the sort of rain you can walk around in a t-shirt and shorts, which is better than our rain, which is 85 mile an hour sideways rain that stings your face. That's not much fun. But I shall still go out in it because the kids love it. And it's good fun watching the dog with her ears going like that, not knowing what's going on. Anyway, that's tomorrow. Right, I'll be back this afternoon, 1:20 for the New York session. Tomorrow morning for Frankfurt, as usual, 7:50. So anything you need, let me know. I'll be in Telegram. Other than that, I will see you guys this afternoon. If not, tomorrow morning. Have a good day.